Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Hey, look at Toasty here. He's got firsties. He's early this day because it was probably because I made fun of him for being late the other day, huh? Well, let me tell you what. This market is getting a little boring, to be honest with you. Let me come over here to the charts. Yesterday, man, so much expectations in my mind about CPI, but they really tempered them down. You see here, ES had a pretty good run in the beginning, but then just kind of fizzled out. And here in the overnight action, nothing, nada. ES is just flat here. Same with the S&P, or sorry, same with the treasuries. Oh, there was a little bit more volatility here. We are a little bit lower today, but I'm like, man, by the way, we should come in here and mark this on 6:30 here, CPI, right? Drawing tools, event, 6:30, CPI. Okay. Anyways, maybe a little bit of flattening going on here in the curve, but nothing too crazy. Now, oil was doing pretty good yesterday. I mean, most of that happened in the overnight action, just kind of sideways in the overnight like everything else. Man, you think we get back up to that 85? That'd be awfully quick, right? Right to our price target. And natural gas had another little run yesterday, but it's coming off this morning. It's not, I mean, I don't think that we're in dangerous levels quite yet, but it is certainly concerning for energy in Europe. I blame Germany. Gold and silver, they're still holding some of their gains, so that's good. But I don't know where gold's going to go. I've seen so many conflicting opinions on gold. I find what it does these days a little bit confusing, to be honest with you. Here we go. Copper had a great day yesterday. Look at that. Good move up. Now, one of the things that we are seeing going on here, by the way, Bitcoin holding some of its gains, but it's still within like error range. Like they could go back and retest the lows of lows if they wanted to. I don't think that they want to, though. But the dollar took a little bit of a hit after that CPI below 95 and even a little bit more this morning. So the dollar becoming weak is probably the only major change that we've really been seeing here. We'll want to keep an eye on. But here in about a minute and a half, we are going to get some news. We're going to get the US PPI. Core PPI month over month. We're looking for reading of spot 5 versus a previous reading of spot 7. So if that is higher than expected, then this could just really upset this market still, because then that would just mean that the only reason that the CPI has stayed in line is because the producers are eating it, right? Also, we're going to get jobless claims. Initial jobless claims, we're expecting 200K. Just preparing myself here. All right. So we should keep ourselves prepared for a possible, move here if the PPI is higher than anticipated, right? Fix that. Okay, PPI comes in line. The core PPI is in line. The headline PPI is less than expected, but again, that's X energy. So because we saw a decline in oil in the month of December, that's probably why we're getting that. So I don't know if that's really too big of a deal. Initial jobless claims being 230 versus 200 is not what we would like to see, but it's not awful. It's not awful. We are seeing a little bit of a rise in the S&P 500 here, though. Well, we are seeing the dollar move down a little bit, but I have to say, for trade, for us for trade, I don't think that was necessarily the best result. It's kind of interesting here. I mean, we saw this yesterday after the CPI was actually quite directionless, right? Now there does tend to be a change in the flows after the holiday on Monday. So that could be a factor here as well. But it kind of looks to me like volatility is decreasing, right? I don't know. And my back does not necessarily feel good this morning. I can feel it over here in the front of my chest. It's like when a muscle back there is sore, hurts the rib and pushes all the way on to the other side. Well, man. Mm-hmm. Mm-hmm. Oh, it's Thursday. I didn't put the trash out. I didn't really have that much trash, so I think it's okay. Mm-mm-mm-mm-mm. Xi tightens control over China by threatening officials with an other anti-corruption drive and demanding total loyalty to himself and the party. This is totalitarianism. Well, after initially rising, the treasuries have actually come down a little bit. Now, this is just well within the range of the overnight move. You know, they were kind of in a tight range around 12 in the 10-year. So I don't know if that is really anything other than just rebalancing. Hey, let's fix this over here. Oh, you know what we can talk about? Here we go. I've been trying to make a different thumbnail for the stream. Let me show you the new thumbnails. And you guys can vote on them. All right? There's this one. And then there's this one. I make them smaller. It's not like the greatest facial expression on the picture, but it works. So I got one with me in front of the computer, and I got one with me in front of just, having the Dom in the background. I kind of did that one because I really wanted whoever's out there to go, oh, this guy, he has a Dom. I know what that is. I want to watch that guy. Right. And then just for comparison, if I come back over here, where's our current one? Our current one is the winning, is what I call that. Yeah. Yeah. This one right here. This is what we had before. I do think this is better. So let's put a pull up. By the way, did I say hi to Keller there? I think I did. I'm not sure if I remember. Okay. So let's do which thumbnail is best. The old one, DOM background, or computer background. Ask your community. Da, 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 da. By the way, thank you guys for hitting that like button. One of the things that's so cool is in the stream lately is that you guys have just been clicking that like button. Almost everybody does it. I don't say anything. It just happens. Thank you very much. Hey, Air Cages, how are you doing? Okay, the treasuries did kind of test that downside there, but quickly came back. I'm not necessarily noticing any huge imbalance in the order flow. There is a lot more market selling at the moment, but this just kind of looks like falling back into the range that it was previously, at least for now. We may see a breakout of that range and some increase in volatility later. I don't know. We should remember that we got like retail sales tomorrow, which is also a big number, and then the holiday. So there's still going to be some people interested in trading, don't you think? Are those and no? I haven't made it to an NFT. I told you what my NFT idea was, right? My NFT idea was we'll go and get that paper that was what is the name of that paper, by the way? I'd have to go find it. Basically the paper that is popularly credited with, the efficient market hypothesis. This is basically going over the empirical evidence about market statistical efficiency. Well, I wanted to make just take the front page of that and like do something artistic to it and turn that into an NFT. So make the efficient market hypothesis into an NFT. That was my idea. But because it's a published paper and everything, and I don't own the rights to it, that kind of was like what puts you in a kind of a gray zone. So I'm sure that somebody out there is not opposed to the moral quandaries with taking somebody else's work and turning it into an NFT. And you can go and do it and make the money. But I decided that it was better for me to not do that. But that was my idea for an NFT. You could Photoshop your face on the yeah. But then I'd have to pay like $100 in Ethereum to mint it. I don't want to mess with that. Don't think I'm familiar with Million Token. To be honest with you, there for a while I was kind of keeping track of like the NFT space and everything. And when Bitcoin started failing hard here, I just kind of turned off. I was like, well, it's falling down. Of course, the people that are really into Bitcoin aren't swayed at all, and I'm just sick of this thing. So oh, that's the tech lead one. Oh yes, I watched that whole drama. Yes, I know exactly what you're talking about. Oh, dude, after watching the CoffeeZilla video on that, I was so mad at that guy. I never liked him anyways, though. I remember when YouTube started YouTube initially recommended that creator to me at one point because he tried day trading and stuff, and he had a bunch of stuff about when he got divorced and working at Google, and I was just watching this and I was like, he doesn't really know anything that I don't know, and he's an asshole. That was my impression of him, and and I did not watch him. And then, sure enough, he once goes and promotes just like a blatant outright scam. It was just like a blatant outright scam. The $1 million token to really, really just shady stuff. Yeah. And then he tries to the when he was trying to defend himself and everything was pretty sad. There's a lot of this going around. I have to tell you, it's really funny. I see so many people out there. Um, just everybody wants to be the guru now. Yeah, we are in the golden age of gurus. Like you would think that is just in day trading. All these guys, they want you to buy their day trading program, whatever, right? And that's certainly a thing. But I'm seeing it all over the place. I'm seeing people doing, I'm just going to help you get on your feet in finance. I'm going to help you become a tech expert. Is just, uh, and I don't think that any of these people necessarily think that they are an expert in their fields. But they think that they can just fake it until they make it, right? I think that that's most of what's going on. What platform do you use? I am using Jigsaw Day Trader for my DOMs and for the charts like this synthetic dollar index that I have down here. I use NinjaTrader 8. If you go into the video description, I have an affiliate link for Jigsaw where you can get $100 off of the Day Trader Independent package. And if you purchase through my link, the channel gets a commission. I also have my indicator package that includes the synthetic dollar index, which is available for $100, one time only fee. And you can download and try the indicators out for 2-week trial. Yeah, very sad. Hate these people want to be coaches. Yeah. Well, you know what? I think I was telling my wife, I don't know. She just does not have the fire in her right now. Like it's I think it's a woman thing. I think it's a when you have babies sort of a thing. Your mind just goes into babies are my life right now. Like taking care of this child is my life. That sort of a thing. And the whole idea of like hustling and like studying to learn something is like nope. Because when we talk about it, she kind of sounds like yeah, maybe that's a good idea, but then she doesn't do anything. But I was telling her she should become a performance coach, that she should study all of the psychology behind performance. And like I went and found a bunch of books and stuff too, right? Well, that would be a great way to take it, right? But that's the thing that's like really frustrating is that you got these people that are trying to become gurus in areas where there is a significant body of research out there and they don't even understand the research. There's this guy on TikTok that kind of irks me sometimes. He's a guy that he wanted to become a chiropractor, and then while he was in chiropractic school, he basically realized that chiropractic is kind of bullshit, which it is. At least there appears to be some use for chiropractic, but we don't really understand what it is or why. And the majority of the things that they claim chiropractic can do are just complete nonsense and have no empirical backing at all. So what he does, he does kind of what I do with finance. He's reading the studies himself and saying things. But what I've found is that he just is not, because he didn't go to school for it. He doesn't have the background knowledge necessarily to know all of the studies that are out there and what each of them mean or being able to interpret the results. Like one of the things he said that irked me was they did a study about a year or two ago about whether foam rolling was effective for performance, and their conclusion was basically that it could be effective, that among the highest level athletes it could have some benefit, but he basically said that it was nonsense. So it's like, your interpretation of the study is not what the study said. And he doesn't understand like the limitations of the research, like how difficult it is to really um, prove certain things in the sports fitness field in particular. And then he generalizes everything to like regular people instead of like people that want to be athletes or that want to, you know, their body to be in the best condition or their back to be in the best condition, you know? And it's just kind of like that. So I kind of in that sort of a position too, though, aren't I, right? I I am trying to not be a guru. I mean, that's a big thing is that I want to be the anti-guru in respect to that I'm telling you don't go and try and find somebody and copy them and that's how you're going to become successful in trading. It's something where you have to do the work yourself. You have to do your own primary research. And I can share with you a lot of background information that I have found that it really makes a really solid base for you to start your research from, right? And that's what I'm doing. And along the way, I found a couple of things that I think are really important for society at large to understand as well about the informational inefficiency of markets. So, that's kind of our thing. So I guess in some respects, one might watch the stream and think that I think of myself as a guru, even though I'm very much trying to avoid that sort of a thing, right? Which part of tech lead was shitty? So, well, I just didn't like his attitude from the very beginning. That was my thing. Is like I could just tell that he was an asshole. Like this was the guy. My vision of him is he was a tech lead at Google, and none of his employees liked him, and he eventually left. That's like my kind of picture of him in my mind. But what he did was he went and he minted a token, and he was like providing the liquidity for it of sorts, and he manipulated it so that it would jump up, and all of his subscribers and stuff went in and bought on the token, and then he made it collapse and he pulled $1 million out of it or whatever, and all of his subscribers were left holding the bag. So there's a channel, CoffeeZilla. I really love CoffeeZilla, and he's basically him, and then Spencer Cornelia is really dedicated about it. I tell you what, Spencer Cornelia, if you're listening, I would really like to talk to you. I got some people for you to look at. Like I got some stories. I'm telling you, like I love your channel. You have a lot of funny stories about gurus and the stupid things that they do. I have some guru stuff that will just knock your socks off. Just absolutely, you can't make this stuff up. Some of the things that these fake gurus are saying that nobody else is really talking about, and I would love to show you. If you're listening, Spencer, hit me up on Twitter. He's probably not listening. I've been trying to figure out how to get a hold of that guy because I just think this stuff is funny. But he is the one that's really going through and like exposing all these fake gurus. And like CoffeeZilla too had a more widely shared video about tech lead. That's why you'll never become a millionaire guru. You're not willing to sell your morals for money out. That's the problem, Air Cages. It is. If I came in and I sold my soul and I said I am the greatest trader in the world, I'm never going to take a live trade so that you can't question that I'm the best trader in the world. But I'm going to claim to be the best trader in the world, and then everybody will come in and buy my lovely indicator package for $2,000 a pop, and my education course and all this. No, I do want to write a book though. I've been thinking more and more, man. It's just I don't know, maybe it's just this market this week, because after that CPI, the action after that CPI, because I thought even if CPI isn't a big deal, that you probably get some decent movement and we should still be able to make some good calls. And you know what? Like, we came in and we made a good call and it didn't really go anywhere. So I think I'm a little bit discouraged by that because I want to make some trades here in the micro yields, and I'm just not seeing the opportunities right now. But maybe we'll get more opportunities. Well, tomorrow we might get some opportunities here when the day's not over. We might get some today. Well, we got retail sales tomorrow, and then after next week, then President's Day, and then the market tends to change after that. But I've been thinking about, oh, there's those days like Monday where there's no news and I tend to do poorly anyways. Maybe I should just work on stuff on stream, or I should just not stream that day and like record a video or whatever the deal is. Because I think the thing that's hurt us in 2021 in particular was that we just didn't get as many good videos out, right? And that's kind of hurt the channel. We also kind of lost a few people over the holiday, but I think they'll probably come back. Probably after President's Day, maybe we'll get some more viewers back. And one of the things that I would really like to do that I just am not finding enough time to do lately is write a book. Um, I mean, the stuff in this book, it's not necessarily anything that you won't find out there. It's just you won't find it in any one place in a way that really makes sense for what you need to do and where you should focus your efforts. I think that you guys that are here every day on the stream and are really good traders, I think that you understand a lot of this stuff already. Oh, I'm not talking about Ace and Garrett. I'm not talking about anybody in particular. I just know that typically our viewers get to around 24, even after some of our regulars had disappeared. And these days we're more around 18. So there's, 4 or 5 people. And the other thing is, what's really interesting to me is that, even though we might only have 17 concurrent viewers, we still have hundreds of people that come through. So I think that there's a lot of people that come in, see what we're talking about, see if they're interested in it, and then if it's not, they move on or whatever. So probably some of this stream is just I've got to do better at creating more engaging content, I guess. I'm not quite sure what I should do on that one, but it's it's definitely something we can work on, right? Anyways, so I would like to make a book. And I think that when I'm done with this book, it will be a thick book. I think it's going to take a really long time to write because, the sorts of things that I want to put into this book are like, okay, here are the economic numbers. Here's everything that matters about it, everything that you need to know about being able to interpret it, and the way that it's moved in the past, like all of this extra context that you can get from the history. Here's for this instrument. Here are the things that you want to keep an eye on that you don't necessarily pay attention to, or you might not know about if you're a beginner, right? And the only way that we find out about them is like you talk to other traders, and then you find out, oh, when a corporate business offers bonds, the banks go out and hedge that offering, and that causes them to buy the treasuries up. And so that can be a significant order flow in the market that can move interest rates. Is like Amazon. Yeah. How do you publish a book? I don't know. Well, Gary, I don't think you were there that day, Uzi, but I got fed up with Gary and just straight banned him. He was claiming to mess with his trades. He was lying about things, and he was claiming to mess with trades, and it was just like this guy was never actually friendly. It doesn't seem. I think that he's always been trying to screw with us. I think that he came in because of the cryptocurrency stuff, that he's a true believer in the cryptocurrency stuff, and that even though he maybe shared some interesting things with us, that was mostly to gain our trust so they could continue screwing with us. So that's why I got rid of him. Ace just has kind of gone his own way because he's not a believer, to be honest with you. This is kind of sad. All of it was like the whole thing was as I was trying. He was like my test case. Was like there's a person that seems to be reluctant to want to believe this. And it seemed like no matter what I said, he was never interested. So I think that eventually it got to the point where he got bored of it because I wasn't interested in talking about what trade he was taking. I was interested in talking about the informational inefficiency of markets and why markets are statistically efficient, and so we were just incompatible. So there's nothing wrong. There's no animosity or anything like that. He's been focusing on his own thing. And quite frankly, I think that it's been good because we've been able to focus more on the content that I think will help you guys. So it's okay. We're still friends and everything. He comes back in here, we'll all still be happy. It's all good. It's all good. But he was helping some business that has indicators. So I think that he's probably just focused more on that. Yeah. Yeah, it kind of did come down to that. As it kind of came down to, well, okay, you don't want to believe the empirical research that we have. You're claiming that you can do this, so we're going to have to investigate that. Otherwise, we can't go anywhere with this discussion. There's nothing to talk about if we can't see your results, and he didn't want to share them. So it was like, well, it's not like I'm madder that he's obligated to do that. It's just like, okay, so then what is there to talk about? Right? But that always, it comes down to what is the central claim here, right? The central claim that I'm making is that they'll tell you that the thing that you hear over and over in markets is find somebody that knows what they're doing and copy them. Don't get me wrong. Having a mentor really helps. Okay, having somebody that's done this, that's been through this, and can guide you through the process, it really, really helps. But just trying to copy what somebody else does, it doesn't work. Especially if that's something that somebody else is providing it freely to everybody else, right? If it's really effective, a lot of people are going to start using it, and they're going to arbitrage that efficiency out of the market very quickly. Nah, I honestly think that Gary was always trying to undermine us a little bit. I don't feel bad. You know what's something that I don't know, maybe it's just my own confirmation bias, but one of the things that I see happen over and over again is uh, and this happens usually in Discord. Somebody will come in Discord, they'll make certain claims. I will push back against their claims and I'll say, well, that's not the way that it works. Here's this thing and here's this thing. And I'll show you some examples in the past where that happened and it didn't work out that way. And, try and show evidence that contradicts their claim. And then they'll say, well, you should listen to me because I've been making money from it. And then they don't want to show it. And then that's usually when I have to pull the plug on it, you know? But then when that happens, usually there's a trade that they were making that they were trying to argue, and that trade will lose. So like a really good example was there was this guy that just I don't know what his deal was. I mean, he posted a lot of stuff and it seemed like he was engaged in like what was going on in interest rates. It's just that everything that he interpreted about it was dead wrong. And he was convinced, he said, there is no way. It was like, I will eat my hat if the Federal Reserve starts tapering in November, is what he was saying. And then sure enough, what the Federal Reserve started tapering. And then there's been so many, I've argued with so many people that the Federal Reserve is going to raise interest rates, guys. they're going to do it. And everybody's nah, they can't raise interest rates. It's impossible. It's impossible. Now, I don't think Gary was shorting oil, but there another thing that he will do is he'll come in with a good trade and be like, nah, don't take that trade. And then I'll take the trade and I'll make money off of it. Or at least that. So when I kind of presented, again, when I take these options in particular, like if I'm talking about it on stream, I probably shouldn't tell you this, but if I'm talking about it on stream, I maybe already did it. Okay. But he was looking at the thing and he was like, nah, you don't want to do that. They'll lose. And that position is up big. There was the other one where he didn't like the MSTR short, and he really argued against me on that one. And in that particular case, I got the wrong expiry. If I had gone a month further out, if I just paid an extra $100 or whatever it was and gone a month out, I could have made some mondo money. But I didn't get it quite right. But he didn't really like that trade either. So it was like, but that's the thing is it shouldn't be about taking the other sides of people's trades and that sort of a thing, right? What should it be about? It should be empirical evidence about and real information that we can use to inform our trading, right? When I think about this stream, like when I was making my thumbnail and I was trying to decide, okay, what is unique about this stream that is going to get people to click on my stream as opposed to other people's? Well, there's 3 things. I trade order flow, we trade bonds, and we used informed trading primarily, right? Nobody else does any of those 3 things. There's a lot of people out there trading equity indexes. Maybe they have one DOM up for their order execution and they're doing price action. That's like, I'm not just talking about Matt. I mean, Matt's the one that's blown up doing it, but there's like a number of people that are doing that, right? Whatever. You got to have your content and keep people in chat that keep other chatters engaged. Yeah. I don't know. Like I think that every one of you that are here, and even the people that come and go, right? There's interesting things about you, and I enjoy, even if you're the only person in chat talking at that time, I enjoy talking to you. And when nobody's talking, I usually find something to talk about. I don't know if that probably means that what we're talking about isn't that interesting to people, but what you gonna do? I guess I just haven't zeroed in yet on what is the thing that really gets people to want to talk. Well, I take that back. Here's the thing. You guys love to talk about the coronavirus, didn't you? Oh, yes. You love to talk about the coronavirus. Well, what are we seeing in the coronavirus? It looks like the days of the coronavirus in the spotlight are coming to an end soon. It does not get the kind of click through that it did. I think that people are kind of getting sick of it. Right. So I've kind of been avoiding talking about, because we could have talked about that Veritas thing. That was kind of interesting, but that's also kind of like, I don't know, YouTube. Well, I mean, YouTube didn't take down Veritas's video, so I suppose it could be okay to talk about. I don't want to talk about that one just because I don't think we have enough information. I do this all the time. Like on TikTok, I probably should have made a video about the CPI because I was really drumming up the CPI and then nothing happened. But I wanted to wait and see what the PPI was too. Now that we've seen the PPI, and the PPI isn't really anything. By the way, we did move up in the treasuries. I'm just looking at this, like the move in the 10-year kind of doesn't look like much to me. Maybe it should be more to me in my mind, but to me it's just kind of meh. In the 30-year though, the 30-year seems to have gone pretty good. Eric A just says getting sick of COVID. I think big part of it is that so many people are catching it now. Once you've caught it once, I don't think that you're as interested in it. You catch it and it's just a mild cold and you didn't die, and then the fear, at least for yourself, is gone at that point, right? Because now you know you have you have natural immunity to it to some degree, and even if you catch it again, you know that you can fight it off. But you're not the one that's vulnerable and gets hospitalized from it, right? So once people catch it, it becomes less interesting, and so many people have caught it now with Omicron that is just really not very interesting to them anymore. Lucas says, explain that to the governments. Well, I think that they're starting to get it. That's the thing. Like, the reason that I'm saying this is because I'm seeing the guys in Congress and the guys in the Biden administration and the CDC especially kind of try and start to pivot because they see the media landscape changing around them, and it's almost like they're trying to I don't know what the word is. It's like they're trying to get ahead of, like, for instance, the CDC saying that most of the deaths that are being counted are people that had COVID, but they didn't die because of COVID. That was like they went to the hospital for some other reason, and then when they died, they tested positive, but that's not what killed them. And so there's actually, the deaths are actually higher than they really are. And this is something that conservatives have been saying for, since the very beginning, pushing very, very hard. And it was kind of like, remember having all those discussions where it was like, our data collection in this is not very good. So who can really say what the reality is? Remember that discussion, right? And now the CDC is admitting it. Why would the CDC do that? Well, I think it's because the CDC doesn't want, when everybody kind of gets over it, they don't want people coming in and going, well, you lied to us about this and this and this. They're trying to protect themselves. What should we do here with treasuries? I'm not sure. I'm looking at it here, Lucas. We did move up. In the 10-year, it doesn't look like it was a very significant move to me, right? It was like 4 or 5 ticks up. It was a pretty good bubble up move. I can see the liquidity is there, right? So when we look at conditions, like, we'll be putting this video out on Tuesday, but when we look at conditions, it looks to me like we are in a bubble up trend at the moment. So if we're going to be in a bubble up trend, what we want to do in this particular instance is we want to try and get an advantageous position. That doesn't mean wait for a pullback, but you've kind of got to leverage your position, and you're squeezing the shorts out, right? Because the liquidity is going to be more is going to be strong, right? Like, we should see those bids absorb, and then eventually it buys up, because these bids firm up. Like we're seeing right there, where the bid firm to 2,600. They're trying to. There's not like a ton of people clamoring to buy 17.5, but it looks like they're going to be forced into doing it anyways, right? Okay, so it's interesting to me that none of you guys liked the computer background for the thumbnail. Yeah, well, you're saying you don't see a trade yet. I'm not. Oh, no. Didn't we talk about this already, Lucas? I thought I told you I've been in a short trade since December, essentially. So before we left for the break, I started doing this, and the basic premise of this was, this is going to be Seth's short treasuries CTA fund. So I have to always be short treasuries, but I can control how many contracts I am short treasuries. So I was short quite a few contracts there at the beginning when it started failing, and then I kind of took some profits. Yeah, at the best we were at 8,000. But 8,000 for the year is really great, right? For a fund. Uh, I was assuming, okay, let's say we have $100,000. Uh, which kind of makes you go, whoa, wait. So when these guys are trading like thousands of contracts, they're handling millions or billions of dollars. Wow. Yeah. But that's what that is. So I haven't touched this in a while because I am expecting interest rates to come back a little bit. Um, I mean, we're still at around 1.75, right? And I don't think that I would really be interested in really adding some shorts onto this unless we were starting to get back into the 1.6, 1.5 areas, right? So that's what that is. It's just a sim trade. I wish it was real. But it just kind of goes along with one of the bigger things that I've been saying, which is like, wow, I really love scalping. I love that I did it. I'm always going to continue to be here with you guys on the stream, and we'll be taking trades and stuff. But it seems to me like in the long run, at least where I'm putting my money, that eventually I'm going to transition more towards longer term things, managing a position over a longer time period and so forth. Because like my stock portfolio has been doing really well lately. This CTA trade has been doing really well lately. I've been catching the larger macroeconomic points really, really well over and over and over again. It's just that on a short time frame, even with as you can have all of this edge and there's still a lot of randomness to it, you know. Magic Ohm, how are you doing, sir? Hey, thank you very much. I'm doing pretty good. Okay, so anyways, it's interesting to me that you guys liked this one and not this one. But maybe that's because you bought into my argument that I wanted people to really see the DOM in the background because they'll recognize that. Whereas with the computer in the background, it's kind of wasn't meh. Plus, this background is a little bit less distracting, so the words and stuff stand out. I do not like this one. The words were not big enough, and it just was not sticking out to people. So I think let's well, we got 13 votes. So I think that's pretty much everybody that's here on the stream. So I think that we will end the poll and we will set that to be the thumbnail. Let's see here. Where is that set? There we are. Change. And we'll go to live thumbnail 2. Save. Close all those. Let's just come over here onto YouTube and see what it looks like, yeah? Wow, that's good. I like it. No, I really like it. It's good. So there was there now that we're getting to like 7:13. Oh, you know what? So one of the things is you guys should remind me at 7:15 we should probably do like a rundown again, right? He thinks Keller says that all of his anti-mask and vaccine coworkers got corona and they are scared of getting it again. Oh, okay. Well, that's interesting. That your experience is very different from my experience here in Utah. Although I don't really know anybody that's like straight up anti-vax. I am there. Although one sentiment that's really, really common in Utah is, why are you giving this to kids? That's really common in Utah. But most adults here have gotten it. Okay, so let's go back through the charts here a little bit. All right. So we got that news. Yes, a little bit tilted to the upside, but so far quite constrained still. Maybe on the open we could see a push through to the upside though. We're also seeing interest rates rise here a little bit. You're kind of starting to get into some prices where, like, if this continues to trend up, maybe we're really seeing something significant. I don't necessarily see a setup. Like, I can see that we are having a bubble up move, and I can see that that's the condition. But I don't have any kind of informational edge that tells me that that's going to continue. I could try and make the trade on it continuing, but I don't have anything to tell me that it's going to do that. Okay. So I'm not 100% sure why it's moving the way that it is this morning. It seems like it is starting to get into a point now, though, where it could be a significant move, right? So, oil has moderated a little bit here this morning, ahead of the open. And natural gas is down, but no change from earlier. Yeah, same with silver and gold. Silver and gold have kind of been a little choppy here. Here you can see gold in the upper left corner. Gold's been a little choppy. And the dollar, though, since the news has declined a little bit. It's not like a huge deal, but the dollar is headed down. So I think that could be supportive of equities. I think that my bias here in the S&P 500 would have to be long. But we would need to be a little bit picky about what price that we get, because it is kind of in a range, right? So I don't want to be like buying the top of the range and then get stuck. Do you trade currencies, or is it too much volatile for your style of trading? Well, so I definitely watch the currencies. There's a couple of things about currencies. First of all, like forex trading is I think kind of is I'm not going to call it a scam, but I really don't think that it's a very favorable way of trading. You basically are forced to give up the spread and give it to your forex broker, and that's not a very good deal. And there's also, like, in particular, day trading currencies. So here again, it's interesting the way that different instruments work. Like, I think you can come in and on the treasuries, because the treasuries are so economically sensitive. You can really find some edges here in treasuries. You can find things that will predict future orders in treasuries, right? When you look at the S&P 500, it's a little bit different, because the S&P 500 is an index, and it's a bunch of different stocks, and you can't know everything that's going on in every little stock to try and figure out what price it's going to be. So there are situations where you can, based on the macroeconomic framework, you can make a good play in the equity indexes, right? But there's a lot more randomness in equity indexes, right? Okay. And then you get over to currencies. Okay. Now, in currencies, there are big moves, right? There's like a really big piece of economic news or a policy change in that country that really affects that currency, and you can get these monster moves in forex, right? But for the most part, what is going on in currencies, it's the banks trading against each other. And what is going to affect it is going to be, where the banks need the money that day. And are we privy to that information? No, we're not. And so I think that Forex is particularly hard to trade. And when you go and you look at the Forex, community and what they say and everything, it's, you can definitely see that. It's like the best they can do is try and look at technical patterns, and, that might not be much good. So I think that you're probably better off picking a commodity that is a real commodity and is centralized. So, you'd want to trade oil or the treasuries or gold. Um, and if you're kind of wanting to live life a little more dangerously, you want to do a little bit more of a market making take, you can trade the equity indexes. Uzi says you're going to get it too. I won't make fun of you, I promise. I think, well, I mean, if he's been vaccinated, I don't know. There's been a lot of this stuff where it kind of seems to me like after 3 vaccinations that the number of people that get it is higher than it should be, but uh I don't think that the statistics that we're getting on all of that stuff is very reliable enough for me to be making those kinds of claims. So I'm not going to say that. Yeah, vaccination doesn't stop you. Well, it's supposed to prevent you from it's supposed to make you much less likely to be hospitalized for sure, right? But it is supposed to be more likely that your body just catches it and gets rid of it before you ever see any symptoms, right? Anyways, I don't think I'm telling you, man, the it's it's trending in the other direction. All of the playmakers, all the people in the media, all the people at the CDC are getting ahead. There was this a story in a Danish newspaper the other day, basically apologizing and saying, we reported on a lot of things about COVID where we just kind of bought what we were told and didn't really question it, right? Like it is moving the other way, and I do not believe, unless there's some other really super crazy variant, and I mean it'd have to be really really troublesome variant. I just don't think that it garners the kind of attention or click rate that it did. What are the odds of being hospitalized from COVID if I've had this stuff for almost 2 weeks and haven't changed my smoking habit at all? Yeah. Well, I mean, you're not like ridiculously fat, right? So from my understanding, you're not over. You got to remember, this is the thing this is the thing that drives me crazy the most. Really, when I think about it overall, this is the thing that drives me crazy the most. Most people are not really all that vulnerable to COVID. Okay, it's really the oldest segment of the population and people that are obese that are dying from this, right? And it, it's like you can go and you can say that and nobody's going to smack you down, but it's like the media and the government don't want to say that because they don't want anybody to go, oh well, I don't need to worry about it, right? Because the whole idea here is to get everybody to be super concerned about it so that we can save those older people, right? That's the thing that just drives me crazy. It's like if Keller caught it, and there is still a good chance that he catches it, if Keller caught it, he wouldn't die from it. No way. And but I have seen statistics that have shown that of the hospitalizations, the hospitalization rate for the unvaccinated is significantly higher. It's like 3 to 1. So it's 3 to 1, but I have to say I don't think people obviously. And another thing that I think was Keller saying, oh, I think that people are more afraid of it. I think you may be misconstruing fear. Okay, so it's one thing to not want to catch it. It's another thing for it to be causing like severe anxiety, like dominating your life and your thoughts, and creating like real actual fear of death and anxiety in people. And for many parts of the population, that has been what COVID is doing, right? Like I get this thing, if one of my kids get a certain illness and it looks like it's very unfun, then I'm going to avoid them and I really don't want to get it, right? That doesn't mean that I'm afraid of it. It's just, you know, I'm taking extreme precautions to try and avoid catching it. Yeah. But that's very different from like this mass psychosis that I think we've seen. Like especially at the beginning of this pandemic, when they ask like what the death rate is, and Democrats are saying anywhere from like a quarter to half of the people that catch COVID die, when the reality is it's like a half a percent. It's like half a percent of the people that catch it actually die from it. Like it's ridiculous. And where does that come from? Right? There is this perception in a portion of the populace that is just so far from reality. It is totally irrational and illogical. And these people are literally terrified of COVID, right? And what I'm saying is that group of people is diminishing, because once you've caught it, one you know that it's those statistics that you had in your mind and stuff were false, right? Once you've caught it and everything, then you realize, oh yeah, most people do live, right? I'm not going to spend the rest of my life trying to avoid being sick. Well, do you think so? So this goes to the discussion that I wanted to have today. So I was trying, I'm trying to read a little bit more Taleb, because I'm starting to pick up on the I want to say like the takes in academia that Taleb pushes against, right? Um, and I think it's not even for me. It's not academia necessarily, as it is just like the day trader space in particular. And what I see in the day trader space is number one, most people do not look towards empirical methods to base their trading on, right? They're trying to find somebody that seems to know what they're talking about or is doing well right now and try to duplicate their method. That's what most people try to do. Okay. And we've spent so much time on this stream talking about why that doesn't work, that markets are efficient and that they arbitrage away, they're competitive. They arbitrage away inefficiencies. And so if somebody makes an inefficiency public and teaches other people how to use it, then they're going to get rid of that. They're going to get rid of that inefficiency, right? That's what most people are doing instead of looking to empirical methods. So then we can come in and we can say, okay, so I'm going to share some stats with you and I'm going to show you information about the market that has, real evidence to back it that this is a thing, right? And what I find there on that point is that we have a problem with naive empiricism in the day trading space as well. So what does naive empiricism mean? Naive empiricism means that like you go and you find a stat about the market and you say, well, this is a significant stat. I should base my trading strategy off of this strat. But what you're doing is you're using like the average and, 70 percentile. These are all tools that are intended for Gaussian distributions, right? Thin-tailed distributions. They don't work for fat-tailed distributions. If you try trading off of it with that kind of approach, you're not going to make money. You're going to appear to make money for a while, and then you're going to get creamed. And what happens, and this is where I think that it gets really frustrating, is that when that happens, they always blame it on the person and not the strategy, right? So you could come in and you could say, well, my traders, they're trading, they're using X, Y, and Z, and their win rate tends to be this, which is higher than what would be considered random. And then that trader will blow out. And they'll just say, well, that trader was being crazy that week and did something dumb. And so they don't count that into the stats. They still say, well, yeah, it works. But once you count all of their trades and you have a large enough sample, then you see that actually this is a fat-tailed distribution and that it doesn't work. We have a problem with naive empiricism. And I'm probably guilty of it to some extent too, because I don't necessarily understand all of these tools. I don't know how to come in and look at like the distribution of range. And what kind of a tool should I use on the distribution of range to try and base a trade off of it, right? What are some of the additional stats that we can use to assist us in that way? How do I even determine what kind of it is it an exponential distribution? Like, how do you create a formula to fit the distribution of what I see in my graph? You know, I don't know how to do that. Not yet. I really want to know though. And so, what are we? We are prone to naive empiricism as well. Everyone has a theory the market is just an auction. Well, that takes me back to, the order flow driven theory of markets. By the way, the Treasury did kind of take a new high there in the 5-year, but not so much in the 10. It is still a very much a tight liquidity driven market in the treasuries today. I'm not sure what drove this move up. We've always got to be a little bit careful when we see the bubble up move, because those tend to be a little bit stronger, a little bit more difficult to flip around, right? But the order flow driven theory of markets, I think, is a much more effective explanation of what goes on in markets. Because I think, some people say that the market moves this way because it's, based off of earnings and everything. And then you'll have a move that doesn't move in line with earnings. And how do you explain that? Well, order flow driven theory of markets explains this. There can be liquidity driven needs that can outweigh the information that we have available to us. That basically that force that pushes things to the correct price based on informational forces is weaker than the one that pushes them away from information because they need to do it for the way that their strategy works or whatever the deal is. Like they're rebalancing their portfolio. That ends up being bigger. And then there's some people that just say that like it's completely random, but you can't say that it's completely random because there are some stylized behaviors of markets that can't be explained by a random walk. For instance, the autocorrelation. There are long-term autocorrelation in markets, volatility clusters, and then all of the other crazy things that we've learned from market microstructure research, like the square root law of meta order impact, the inverse sine law, liquidity holes, etc., etc., etc. So once we take the order flow driven view of markets and we use market microstructure, I think that most of those questions kind of get answered, right? And then you kind of know what you need to look for, right? You need to look for something that predicts future orders. And the more specific you can get about what the future orders are going to look like if I can say they're going to buy it, but if I can say they're going to buy it with market orders and they're going to smash through the limit orders, right? That's even better. Because now I can, now I have a way of saying how that's actually going to affect price, right? So the order flow driven theory of markets answers so many questions, but it also, it digests everything down into one central question. But that one central question is incredibly difficult, which is how do you predict future orders? And there are some narrow cases where you can do that. But overall, answering that question is incredibly difficult, especially on very short time frames. As such, we should always expect that day trading should be hard. Right? And if day trading is not hard, then that probably means that you don't actually have an informational edge or even a statistical edge. You're just taking on risk, which is so very, very common. And that brings us back to naive empiricism. There are people out there that are trading. They don't even realize, and maybe they're making money. And I don't think that they even realize that that's the source of their profits, right? They think that it's because of some stat or whatever. And they don't realize, they don't know the problems with the way that they're trading that stat. They just don't really understand the statistics behind it, really. GT350, good morning. Hey, how are you doing? I thought you were saying you have a good channel, Seth, and I was like, yes, I know. I know, you don't need to tell me, GT350. But and now the other thing though that the reason I was getting into all that FTH is because again, I think that auction theory is is kind of one of the more popular theories, approaches to markets in the futures space, and it's wrong. I mean, a lot of the things that they say the market should do, or at least the way that they approach the market, seem like they could be useful. But in terms of why it does what it does, thinking of it as an auction, I think is incorrect. I think that you want to take the empirical, order flow driven approach to the markets, and you have a much better time being able to explain and analyze what's actually going on at any one given time. So here in the treasury, we have seen a meta order buy. It is steepening the curve. So they're buying the 5-year more than the 30-year. It has been driven by limit orders more so than market orders. It very much looks like a bubble up move to me. What's the piece of information that would have predicted that order? I don't know. Surely there's something, but I don't have it. It's been a pretty quiet day. Let's see here. Let's just come back over here to the news squawks here and just see anything. The USD JPY is consolidating near a swing area but continues lower. I do see that the 6J is moving up slightly, but not dramatically. So I don't think that that's a very good explanation for what's going on. I am seeing that as the treasuries moved up, that many other markets are moving. For instance, as the treasuries moved up, so did the equities. Soybeans moved down. Oil moved up with it. So maybe that is some trade based off of the PPI. I don't know. Can you show your? I don't have the 6E open. Like this thing right here. The Vista chart in the upper left. I could open it up for 6E, but you wouldn't see any history, so it would probably be useless to you. and again, like in the currencies, because the primary driver of the currencies is the banks trading against each other, and so what you see in the order flow is going to be different. Certainly, I'm not quite sure how you would approach it. Yeah. Anyways, what was I doing? I was trying to go back here to see. And they're saying the US dollar turns lower. Oh, I haven't mentioned that the S&P 500 did open, and although the action has been pretty choppy and price hasn't gone anywhere, the delta, at the very least, is about 1,000 contracts short. So they sold it, but the buyers absorbed it all. The limit buys absorbed it all. Yeah, I don't really see any headlines that we missed or anything like that. Let's come over to Zero Hedge and see if they have some interpretation of like the PPI that might be. The 2022 Markets Marathon isn't judged right off the block, so that's a really good point. Tesla removes 2022 production date for Cybertruck from its website. Really? Jeez. Initial jobless claims unexpectedly spiked to start the year. Okay. Producer prices surged to record highs. Did I see anything in here? PPI ex food and energy rose 8.3% year over year, well above the 8% expected, and the record big. That's not. Only care about the month over month because that's the only new piece of information. Services prices are accelerating. A major factor in the December increase in prices for final demand goods was the index for gasoline, which moved down 6.1%. That will not be the case in January with $82 WTI. Over a quarter of the December increase in the index for final demand services can be attributed to margins for fuels and lubricants retailing, which rose 13%. The indexes for airliner passenger services, food retailing, machinery and vehicle wholesaling, machinery and equipment parts and supplies wholesaling, and traveler accommodation services also moved higher. In contrast, margins for automobile and automobile parts retailing decreased 2.7%. The indexes for deposit services and for health, beauty, and optical goods retailing also declined. Okay, so the rise that we have seen in treasuries could be due in part to the PPI, because what they're saying is that because the gasoline costs decreased, the PPI number was lower than it probably is going to be next month. Ergo, they bought it up. But like you're getting a little bit of an impact coming back down. Now that might be, especially since some of these orders, these downticks were on very little volume. That could be post meta order regime change, right? Which, if it is the case, we should probably expect this impact to trail off for quite some time. Oh, okay. So the actual number of Americans filing spiked to 419K, but it was only 230 seasonally adjusted. So that is not necessarily good. Is this the Omicron effect? It could be. Hey, Aditya, how are you doing? Was wondering when we'd see you. Just going through Twitter here, keeping an eye out for anything significant that we might have missed. Yeah, so I've been seeing this. Can I complain about something? Listen, Brannigan Barrett is like my man crush. Okay, I really like this guy, but he believes in technical analysis. What's the high probability play for this 120-minute chart? No biases, no opinions. There is none, because past price action is not indicative of where it's going to go. It just straight up isn't. Obviously, if you were going to take a trade, you'd probably want to get this one right here, because that was like the longest, strongest, and most consistent trend. But I don't know. Could you maybe have caught these ones? Taking the short here on the failure for it to move higher here. Well, without the news, I can't say, right? Because just because it topped here doesn't mean that it's going to come short here. And just because it came short here and didn't do that over, like, we had this big down bar, can you go short from there? You go and back test that, but I don't think that one's going to come out in the long run to be very profitable. But he's been doing that. He's been talking about that a lot. He's like, oh, look at a chart and just without any context and say, what do you do here? No, that's technical analysis. Maybe yesterday I was thinking about making the technical analysis t-shirt, but then I was like, I don't know if it would be that great. But now I'm looking at it again and I'm like, no, we need to make the technical analysis t-shirt. You know what I mean? Like, here, let's look at it here. We got like, there are still people who made millions by price action and risk management. Yeah. And some people are lucky. Doesn't mean that you'll make money doing that. So when you look at astrology charts, they always have like this multi-layer thing where it's like, okay, there's the center, but then here is the symbol, and then this is what it's called, and then there's like the time around it. There's usually two sections at least. I think in ours we'll just have the chart pattern and then the name of it around the outside or something. But I'm trying to figure out how am I going to make it feel cryptic. I'm going to have to include some sort of line drawing of a bull and a bear or something around the outsides of it or something like that. Magic says that's true. Yeah. I'm just saying these methods are either not based on empiricism or have naive empiricism behind them. And I see this over and over and over and over again. Meanwhile, we have some pretty solid evidence to suggest that the market is more informationally inefficient than it is statistically inefficient. So I think that trying to know as much about the markets as we can and focus on news and stuff is probably a better. You're probably going to get better bang for your time. That's my what is the word? That's my contention. Anyways, so then I was going through and I was like, okay, so we can have, I think that we'll have to include both like chart patterns and candlestick patterns, right? Or maybe we could make one that's chart patterns and one that's candlestick patterns or something like that, right? And then it will have to say somewhere on it, technical analysis is astrology for men. I think that'd make a great shirt. And it'd be like a black shirt with white print. Biden directs U.S. government to procure 500 million additional COVID-19 tests to meet surging demand, the White House says a White House official from Reuters. Okay. I wonder if my financial juice is okay, because I literally have not heard anything from them since the news. We do have a Fed speaker at the top of the hour. That is Fred's Brainerd is going to be doing the Senate hearing to be the vice Fed chair. And then at 8:30 we have the natural gas stocks and a 4-week bill auction. So I don't know. And also with the treasuries coming back off of that strong meta order buy. So this is just like a perfect example of where we're like, well, just because we see a bubble uptrend doesn't necessarily mean that we want to get involved in it, because we don't really know how far it will go. And here it came back quite a bit. Maybe so, kind of looking at some of my positioning metrics and stuff, this wouldn't be a bad area to go for a long if we thought that it was going to go again. But again, I can't think of anything. I don't think that that's enough edge for us to justify taking a trade, especially since the best you're going to get is like we go short 75 and maybe get 74. Watch it just absolutely skyrocket here and the yields drop all the way to back to 1.6 or something, just to make me feel stupid. What's George Conway going? If people go to jail for fraudulently casting one person's vote, shouldn't they also go to jail for attempting to forge the votes? That's not how it happened, George. Oh, I forgot about that whole thing. So how has the Conway relationship gone since Donald Trump stopped being president? How has the last year of their relationship been? I'm interested to know now. Man, I'm thirsty this morning. So here's the question. Why do we have so much naive empiricism in the trading space? And what's the best way to fight it? I think that Mr. Taleb has written a bunch of books to try and help people to understand this stuff. And it seems to me that even though the majority of traders know Taleb, generally speaking, and understand, I've heard about this idea of fat tails, we still continue to see traders try and use naive empiricism methods to base their trading. So what is with that? Is it just because they teach you in the most that they teach you about statistics in school is like, you know, finding the average of something, you know, or what the straight possible, given a die roll, what is the probability that it ends up being a 6, and you add all of the different possibilities up together, you know? And is it like a matter of when all you have is a hammer, everything looks like a nail? Is that what it is? And well, okay. So if the problem is that if all you have is a hammer, everything looks like a nail, then probably the solution to that would be to give them other tools. Yeah. Except for that, the problem there, and I think Taleb talks about this, is that these other tools require you to really actually understand the math. They're not simple to use, as I think the problem there. They're not simple to use. I don't know. Well, you could just take them off onto a completely different track. I mean, I guess that's kind of what we do is we just say, well, we're not even looking at the statistics. We're just looking at what we know about the markets right now, right? But I think that people still want to do it statistically. Hmm. It's a tough one. I think that I myself, to solve this problem though, I think that I myself need to understand more about these tools that Taleb talks about that we can use to analyze fat-tailed distributions and you know try and predict or make the correct decisions based off of that. Because he talks about it like the the correct decision to make, you can know what the correct decision to make is or what the best decision in that situation is to make. Okay, can you? How do you do that? So I'm looking at it. I don't think that they would have given you 75. I'm not really seeing not very many orders going through, at least. Does kind of look like the micros are selling. Yeah, the bigger problem here, um, do I really want to take a trade in the treasury on a bounce when the S&P 500 seems to be so choppy and directionless? This just seems like a really crappy market, don't you think? Seems like a really poor market right now. They might come up. Let's make sure that we reset things so that we know where we're at here. When it goes up, I can be like, see, I should have bought it, guys. I should have bought it. Who is Eric Weinstein? My sense of watching Fauci in testimony is that he doesn't question the machine in which his life plays out. He believes that noble lies told, corners cut, coercions used, questions evaded, facts withheld, definitions shifted, etc., are what any adult understands about the world. Brett Weinstein, you are watching an illusionist while standing exactly where he expects you to be. Your perception is putting you and others in danger. It takes many epic cycles to make these lies knowable. Seymour, I'm not sure I understand your perspective. He repeated, tergiversation leaves open many interpretations. Have you narrowed it down to one high conviction guess? I'm not able to do so. I would think that I stood in many spots to see the possibilities. How about that? I think that Fauci is, man. Do you really want to talk about Fauci? I'll tell you what. If you don't want to talk about Fauci, then say so now in chat, and then I'll talk about him anyways. All right. What I see from Fauci is that he is a administrator of epidemiologists, which means that he is not so directly involved in the science these days as much as he is in administering it. And of course, he reads all the studies and stuff, or at least I would hope that he does, or that his assistants give him a really good rundown of what that information says. But he is an administrator primarily, and he is not a public relations expert. And so I don't think that he has the foresight or the expertise to come in and say, if I come in and I tell people that masking doesn't work, and I mock it in this way and say all of these things, and then only to later flip-flop and say, we really need everybody to wear masks, this is really important, the effect that is going to have on your public credibility. He doesn't know how to craft messages in a way that inspires confidence. And instead, he tries to take the administrator, scientific administrator position of it, which is like, this is the science, what we're telling you is the way that things are. And in a way that doesn't allow him flexibility. So that the more that he talks, the more his credibility is harmed. I saw this man on TikTok. It was, oh my gosh, it was so good. It was this whole thing over, did the CDC fund gain of function research? And in the congressional hearings, they asked him about this over and over and over again, like 10 different ways. Did you guys fund gain of function research? And he says no. Okay, the reason that he says no is because their definition of gain of function research says that gain of function research is different than the research that they actually did. Okay, they're saying that the research that they did doesn't actually qualify as gain of function research, right? But then they show all of these videos where he was giving lectures, where he was calling that research that they were doing gain of function research. So in all of their private meetings, in all of their lectures and stuff, he's calling it gain of function research. But then when Congress wants to know about it, he says, oh, it's not actually gain of function research. He's calling it gain of function research to all of his colleagues, but then saying that that's not what it is to Congress. Oh my gosh. And he just looks like such a slime bucket in that video. And like, hey, you can, it's a legitimate argument to make that the legal definition of it is not actually gain of function research or whatever the deal is, but he does not present that message in a way that inspires confidence. Instead, he takes this straight position that like, I don't understand how he expects to talk the way that he does and the public believe him. It's probably the case. Early on in the pandemic, there was this, they made a lot of hay about, well, people didn't trust Donald Trump, but they trusted Fauci. And so they raised Fauci up on this pedestal that he was never going to meet the expectations of. And what you do when you put somebody up on that pedestal is it goes to their head, right? And I see this happen. Let's relate it back to trading. I see this happen Everybody. If you're a trader, you made some money, or you've achieved some degree of notoriety, it goes to your head. Now, all of a sudden, you're really good at it. So, I'm going to say what I want, even though probably what you're saying is not very effective, or the methods that you were using were just you were completely random and you just got lucky. But it's like you never acknowledge that. We never acknowledge that. Why is it? Why is it that when a trader blows out, when a trader blows their account, the blame is on the trader and not the strategy? I understand that there's this attitude that if you always take responsibility for your actions, then you're going to do things to change your future actions and avoid those consequences. And so it's a really good attitude to take responsibility for things in your life, right? But when a strategy doesn't work, whether it was you or the market or your strategy is very, very important, right? Because if it's you, then you need to continue using the strategy that you're using, and you just need to have better self control. You need to work on methods that, so that you're not as scared, so that you make more clear decision making, et cetera, et cetera, et cetera. Or maybe modify your strategy to account for your own behavioral problems. But if it is the strategy that is problematic, then it doesn't matter what you do in terms of your own mental states and so on and so forth. You're still trying to trade something that doesn't work. And in fact, the better you are at trading that strategy, of doing it the way that you want to do, the worse you're going to do if the strategy itself is not actually work. So why do we always assume that it's the person and not the strategy? Isn't it much more likely, given that the market is so statistically efficient, isn't it much more likely that the strategy doesn't work? I mean, it's likely that both things are the case. That your strategy doesn't work and you have mental problems, right? It's just kind of boggles my mind here. But I guess that's just because I've gone through this so many times too, where I was like, I'll do really well for a while, and something will happen and I'll do something stupid. And how do I know if it was me or the strategy? Well, I think that the last time that we kind of screwed up on things, it was more me than the strategy. I was not very good, or at least I don't have in laid out in my strategy how to manage how much risk you're taking on very well, right? I've been working on that. I think I'm getting a little bit better at it. This experiment that I'm doing up here in the treasury is a really big part of that. Okay. Um, but I also think that with the way that I trade, if we're basing it on an informational inefficiency, then you're going to run into a certain market that you don't understand and you're going to make the wrong decisions over and over again, right? So there is a problem with the strategy to some extent too. How do you sort out when you're uh, in an unfavorable market, right? So we still have to work on the strategy, right? Like that changes what I need to do, because if it was just me, if it was just me, then I should spend all my time reading psychology books, right? But it's not just me. So my understanding of markets, it was my understanding of the oil markets and the way that OPEC works and the influence that the administration can have on the price of oil, and the seasonality or the flow of regime changes in oil and how it goes throughout the month because of all of those things, right? That's what I didn't understand. And that's what I needed to improve. And that's why I think I was able to take this other oil trade. Once I kind of sorted all that stuff out, I was able to take this other oil trade, and it's doing really well. You're reading The Real Tony. Is that a book, GT350? I'm just like, I know you posted that comment like a long time ago, but I'm reading through that again and I'm saying, oh, was he talking about a book? It is interesting to me that he has been in that position for such a long time. But, oh, okay. Yeah. Yeah, like this is one of those things that in politics in particular get really really difficult to sort out because so much stuff happens. Okay, like you want to go back and think about every political act that Joe Biden has ever made in his whole political career. For somebody that's been in Congress as long as Joe Biden is, he's taken just about every position on every issue that you can possibly imagine now. That guy. He's defended the filibuster in the past. Now he's saying we need to get rid of the filibuster, right? And I don't think that people understand this. I think that often what happens is that people do not stay engaged in things for very long, particularly politics. I think that people get engaged in politics for like a month, and like the normal person's brain, there must be research about this. What kind of research would we find? What things would we need to research? What terms would we need to be looking for to see if there's any research on this? Like, what is a person's attention span on something? Like, if they are engaged in a particular political issue, right? So much so that they're reading about it every day. How long can they do that for? Like, how long does that last before their brain gets bored of it? That state of anxiety, should I call it anxiety, being triggered over that particular political issue, uh, no longer does it for them, and they move on to something else. How long does that take? You know, because it seems to me like in politics that people will be like really engaged in something for like 2 or 3 weeks, and then they move on to something else and they completely forget about it, and they don't think about politics at all anymore. Tommy Payne says Dwack is back. Let's go and look. Let's go and look. I was seeing, I was kind of wasn't gonna look at Dwack again until after the 16th, but let's come over here to Trading View and look at it there. I was thinking about making a video on Dwack, but then I was like, yeah, but we still don't want to be the ones that I don't necessarily want to be talking about individual stocks, or at least not promoting individual stocks, right? Let's get rid of our range estimate thing on here. Okay, so well, I wouldn't necessarily call it back per se. They are back to 72. They are up today. If you had bought in here, you'd have a nice 50% gain. So that's pretty good. Let's come over here to finance. Yahoo. Let's see, is there any kind of news or anything on the stock? So this is the way you got to do it, by the way. If you're going to manage like a portfolio of individual stocks, you want to go in and research maybe 2 hours a week on that company. You want to go and find the headlines. So Yahoo is a really good way to do that because they come in here and they have like all of the news here. Providence Advisors LLC buys iShare Tips Bond ETF. No, what's that? That has nothing to do with it. Okay, Motley Fool had an article about it the other day. Okay. Shares of the blank check company Digital World Acquisition Corp rose for no apparent reason. But you're supposed to tell me why. The stock continued its nice run from last week after reports revealed that the Donald Trump backed social media platform Truth Social, which the company is merging with, plans to launch in February. Okay. So so the thing that I was seeing when I was looking at like the subreddits, let's go look at the subreddits, reddit.com/r/DWAC. What I had been seeing was people speculating that it would happen on the 16th. Mm-hmm. Well, I'm not really seeing much information. It's just people getting excited that it moved up 50%, which for a stock of that kind is kind of like you want to think 50% is a really big rise. That must mean that something is really happening. Not necessarily. A stock like that could rise 50% for no reason at all, or because some fund got in it and they don't know anything, right? Yeah, see, they're just yapping. I don't know what the deal is with Funware. That one always gets mentioned along with the other ones, and I'm like, who cares? Yeah, there's like the app is on the Apple App Store, and they've got pre-orders and stuff. But like, here's the thing: as soon as it goes up, and the service is out there, and Donald Trump starts tweeting things, Apple's gonna take it down. Like, that's gonna happen, right? Okay, so not anything new. So here's my opinion. I'll share my opinion on DWAC again here. I'm not just making note here that I'm not a stock analyst. Okay, it's not necessarily my specialty. But the thing that I'm seeing in DWAC that kind of soured me on it was that Devin Nunes is going to be the CEO. Now, I have nothing against Devin Nunes personally, but Devin Nunes, his specialty is farming. He was a farmer. He went to college for farming science and then became a senator. So, or sorry, a congressman. He's not a senator, right? He was in the House of Representatives, if I recall correctly. I could be wrong. I should go look that up. It doesn't matter. It doesn't matter. Oops, I clicked somewhere and didn't mean to do that. Let me switch that so that I don't accidentally click into a position. There is absolutely nothing in Devin Nunes' experience that suggests that he would be an effective CEO for a company, or especially not an effective CEO for a social media and news company. There's just absolutely nothing there. Why was he the one that was selected to run? Because in my mind, Trump having a social media website and a news platform and everything, that could be Donald Trump's legacy. That's the thing that if I was Donald Trump, I would be focused on. So I'd be putting all of my time and energy into that and making that big, because that's the thing that could have like a lasting impact on the world. Well, what are they doing instead? They gave the position to a guy that, as far as I can tell, like why him? They didn't even really try and justify it. It's like, as far as I can tell, they only gave him that position to reward him for loyalty. Like straight up, it's like, this is a good position to reward you for loyalty. Who is involved in the actual running of this company that's going to inspire confidence in me? Okay, because the fact that it is a Trump-backed media company, that's definitely something that could take off and become a huge deal. Totally, yeah. But it's a really hard thing to pull off still. You got to have the right people to do it. And I'm going to be investing in the right team. And what did they do to show us that they have the right team? Absolutely nothing. They haven't shown us. Devin Nunes is like the only name attached to it. It's not enough for me. So that's why when DWAC came back down and we were kind of in an area where maybe I could justify taking some risk on it, I decided to sit on the sidelines. They're going to have to show me. So one thing could be the website launches and it's really good. I'm not so sure that it actually is going to be good. I mean, what feature are they going to have that Twitter, all of the other Twitter clones don't? That's kind of like one of my big problems here. But uh I don't know, man. It's just, it just is not inspiring confidence in me. Now I may end up regretting it, and I think that if I was going to play it here, the play would be buy for the spike that will happen when the website goes live, and then as soon as it goes live, get out, because probably what's going to happen immediately after the website goes live is all sorts of reports about how the website sucks or it's been hacked or whatever the deal is, and then they'll sell on that, right? And then maybe after they sell off of that, we could maybe then you could buy in after they've gone through their rough period. So I think that there's going to be that. I'm thinking that maybe they do poorly and they have some sort of a reorganization and restructuring, and then they get people involved that I can have more confidence in. Okay, there you go. You missed a couple of comments here. Yeah, True Social is coming out in February, so we'll see. NASDAQ Killer says it's so slow today. It really is. You know, I really hope that when we come back from the holiday, by the way, I mean, if you guys really would like me to, if there's something that you want me to do on Monday, then you can message me and we'll see what it is and we'll do it. But otherwise, I think that I'm going to work on videos and so forth on Monday when we have the holiday. Okay, so just so that you guys know, no stream next Monday, and we'll probably be doing that more often on Mondays because we got work to do. We've got work to do, and I'm not finding the time to do it all. There's sometimes when I'm in the evening, I'm watching TV and I'm like, well, I could be doing this stuff for the channel, but then it's like you have no mental energy in the evening, right? So really doing this stuff in the morning is the best time for me to do it. And if I need to take a day off every once in a while to do that, I think we should. Okay. Keep an eye on the Russia and US talks, might be an escalation soon. Yeah, you know what though? Like that, I find that game so frustrating because remember there was all this talk that like come January Russia could invade and stuff, and then like nothing happened, right? So it's really hard for me to know when this is really becoming a big problem or not. At the moment, I kind of feel like that it's just saber rattling. Like Russia is all acting like they're super upset and the Americans are going to come and attack us and we can't allow that. And I'm just sitting here like, whatever. What holiday? It's President's Day on Monday. Financial Juice not reporting on the FOMC. Oh, right. Well, so TradeRouter, that it is just Brainerd, the vice chair, talking when Powell spoke, and this the hearing that they're having is like the confirmation hearing before they vote on, you know, whether they want to reinstate him as president and all that sort of thing. So think about that from the perspective of Powell. Okay, you're testifying in front of Congress about being renominated. You don't want to say anything in that confirmation hearing that could be noteworthy. Really, you don't want to be saying anything that could affect markets. Okay, because can you imagine you come in, you say something in the Senate hearing, and the markets take a complete plunge, right? Like, is that going to help you get renominated? No. So I think that there is kind of a an incentive for that to be quiet. And of course, her opening comments are released like well before the thing. So the new move was short. They just tested the highs enough to hit my stops in the ES. Yeah. Well, it is. I think what we may be getting here in ES is like, because they didn't get any kind of a strong buy trend and it was just super choppy on the open, they've turned into a sell trend, right? Now that could turn ugly for sure, but I'm kind of thinking at the moment that really, that doesn't really tell us that they're going to have this like real fall through the floor sort of a thing. It's probably more likely that they're still in market making mode, that they're going to push down and see what liquidity they can get on the push down, and then they're going to bounce back up and it's just going to chop both ways, right? BDT is posting Russian, and I do not understand Russian and have no ability to read it, so I don't know what you. Oh, hey, wait. We can copy what he said, and we can go to Russian to English, and I'm going to enter the text. And the translation says, I do not think that Russia will escalate peace for everyone. I don't think that they will either. At least at the moment, I don't think that they will. I think that they're just kind of playing the stupid political game that you have to play as Russia, which is if the United States has missiles in this country, that's really bad for us, and yada yada. And it's not because it really truly is bad for them or it's like really truly a problem. It's a political thing for them, right? Only markets wanted it to go long, but only came in short bursts when they got trapped at the top. Yeah. Well, it's kind of one of those things like, when I come in here and I'm trading, think about it from SES perspective. If I was really looking to make a trade in the ES today, right? What would I have done? Probably I would have gone long and got chopped around a bit, right? And then when I don't get anything from the long, then what am I going to do? Oh, well, maybe this is bad. Maybe they're going to sell, right? So you get the sell orders, but that doesn't mean that the sell orders are going to continue. In fact, the action kind of suggests that their ability to move outside of these ranges is might be difficult. Like, so let's come back here to our charts and do let's see your trading view. And let's look at what the VIX is doing. So first, let's oh, I have the treasury on there too. You know what? I don't think that I need that one. But we'll add compare and we'll do VIX and we'll do it as the index and we'll put it in a new pane. Okay. So we can see we are on the higher end of 17 for the VIX here. We are seeing the VIX rise as the S&P 500 pukes, but we're still much lower than we were yesterday. If we come back and we come onto like a daily chart here and we start looking at the VIX, we can see that, we had, let's unview that. We had a little bit of a spike in the VIX when we had some of those sells, but that overall, the VIX is still kind of in this lower range, after that we entered into after April of 2021. 16, 17. So and it sucks because we are in the low range environment is not necessarily good for us, right? The low volatility environment isn't necessarily good for us. You still use Ninja thoughts on the trade of view? Well, I was really surprised by that. Like my initial thought was why, right? It's like, okay, you're not going to use their software because the Tradeovate software wasn't very good and they were like rebuilding it. And yeah, they do have like the subscription model thing, but you don't need Tradeovate to do that. So why did they buy them other than to just steal all their customers? Like I don't get it at all. I don't get it at all. Is there any information today that would warrant a small move that is not enough to get out of a tight range? What are the mathematical variables that determine a liquidity hole? That's a good question, dude. I mean, you could go and look at the kind of the model, but the thing is that when they're doing that math, they're primarily trying to show why it results in a square root law of meta order impact. But potentially absorbing more of the top step trader contracts, that could be true too. I don't know. Anyways, in this case, when you're looking for a liquidity hole, you're really, again, you want to look for a lot trading in that area, and then an unwillingness for market makers to put up more liquidity is generally what we're talking about with the liquidity hole. That's how you're going to identify it. I'll do some more research because we are going to be making a video on liquidity holes, and I want to be able to give you as much technical information in that one as I can. So I'll need to go and review the stuff that I have and see if there was some math in there that I had missed that we could show you on the board. Anyways, yeah, somebody earlier had asked, can you spend some of that time working on your indicators for Sierra charts? To be honest with you, I've really moved that down my list. So I did do some work over the Christmas holiday, changing the indicator package so that from a subscription-based model to a one-time only thing. So you can, it runs through PayPal now. You pay $100 one time and the indicators are yours forever. I don't really get that much activity on that. I feel now I think at some point we would probably need to do a webinar with NinjaTrader, and that might bring a bunch of people in. But it just doesn't move the needle for very many people. I'm sure that that's why so many indicator packages are priced so ridiculously high, is because there's not that much volume of orders coming through on it, right? But it's not that I don't want to do it for Sierra charts. It's just that, like, where can I spend my time that is going to have the most impact, and in particular is going to help you guys the most. And I think that right now, the thing that's going to help you guys the most is making videos and making the channel bigger and more popular, right? And if we do that, if we're effective at making that channel more popular, then that's going to enable us to have more time to do all of these things. So I'm getting to that point in my life where it's like the time is the most precious resource. It's not even necessarily time, it's energy, you can also just only do so much work in a day. New thumbnail, yes, I did do a new thumbnail. Do you like it? We had a little vote on it. We had a couple of them when we picked one. But I wanted to change the thumbnail because well, there was I did a little bit of keyword searching, so I changed some things with the keywords, but the stream has been a little bit lighter since the beginning of the year, and I feel that what's been going on is that there is a lot more competition out there for our audience, and we haven't been capturing as many of those views as we should. I think the other issue is that there are a lot of people that are coming into the stream and they're just not sticking around for the whole stream. So if you want to help me out on the stream, then the thing to do is to just load it up and just listen, or even just load it up and keep it muted if you really don't want to hear me. Or if what I'm talking about is boring, bring something up that you think would be more interesting. But so yeah, that's why we changed the thumbnail. And so I tried to change it to emphasize more that we're doing order flow and bonds. I also really want to emphasize that we try and rely on informational edges for our trading. But based on the news and predicting future flows and stuff. I don't know how to do that with a thumbnail. And I don't know if we were able to do that with the thumbnail, that it would really matter to the people that were trying to get to click on it. So I've got that. I've always got you on the background. Oh, thank you very much, Brandon. I appreciate it. I have to say, I know I tell you guys this like almost every stream, but I have like the best audience. I think that every creator out there will say, wow, I have the best audience. But who out there has an audience of people where there's like the same 2-3 dozen guys come back and talk to you every day for over 4 years now, right? It's not a common thing. The amount of dedication and how much you guys help. I think that when we look at the channel, like, why isn't the channel doing better? It's all on me, right? Because you guys are doing what you. NASDAQ Killer, by the way, you left a bunch of comments on the videos yesterday. I really appreciate it. There were good comments. Thanks. Looking forward. Would you say take profit would create the most liquidity hole? That's a good question. I suppose if there was a large trader out there executing some sort of a large meta order and they exited their trade and they were able to do so largely in one spot and they were providing some liquidity, school called me. They were providing some liquidity and now that they're out, they're not providing that liquidity anymore. That very much could cause a liquidity hole. I think so. I think yes. But we should just remember that the thing that creates the liquidity hole is putting too much stress on the order book, too much volume. The market makers are essentially taking on too much inventory in one location and they become reluctant to put more up. Anyways, let's see our trade. Trotter says, I noticed overall across the discords, there's not a lot of activity after the holidays. Probably it will ramp up. I think that was probably true. I think that after President's Day, that there will be some more interest in the markets. Although the thing that I'm thinking about right now is like, what's the next narrative? Like the interest rates are going to rise thing that we've had for the first week of the year. Like that's over. They've pretty much priced that in correctly. That is correctly priced in. Okay. As far as I can tell. And in order for there to be another really big move in interest rates, there has to be another really big change in the macroeconomic framework. Otherwise, I think that probably what we're going to see is interest rates come back a little bit to account for is there going to be 3 or 4 interest rate increases this year? So the market's going to have something else. If there's not going to be another variant, I think at some point it's going to turn into are we having another slowdown because of supply concerns, Omicron, etc. But at the moment, it really feels like maybe it's just me. Maybe Seth needs something to grab onto to talk about or something. I don't know. But so we may just and the other thing too is that 2021 was just an amazing year for activity, right? I don't think that I got as much of that. We didn't benefit from that as much as we should, unfortunately. I think that that's largely a function of being very focused on futures, right? The average person is more interested in stocks, which, hey, probably we should talk about stocks more. Maybe I should make that DWAC video. As long as it's okay for me to talk about individual stocks as long as I'm fully divulging my position in it, right? What I hate is when people are literally covering something just to kind of pump it up for themselves. And I don't want to be that person. The lumber market oh man. I really would prefer the lumber market stay low because I really want to build my other 2 garden boxes. It's not a good time to build a custom home, I was seeing this video the other day where somebody was oh, by the way, pretty good quick move up there in the treasuries again. Was that correlated with the change that we just had there in the ES? No, it was not. it was correlated with the big change that we just saw in the dollar there. Some buying, the dollar is moving back up quite quickly and erasing the losses that we've had. And maybe even heading back to 95. That's interesting. And because the dollar is rising, we are seeing oil come down a little bit. Believe you or not, don't worry. Oh, anyways, so what I was saying was, um, they were talking about what's going to happen when houses don't cost as much, because so much of our economy is based on building houses, and like all of these people are going to have spent their whole lives trying to pay off their house, and they'll be stuck in it, and it will cause like an economic collapse when the housing bubble finally bursts, sort of a yada 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 sort of thing. But I don't think it's actually going to work out that way. Here's what I think is going to happen. I think that when they make houses that are really, really cheap, they are probably going to be built out of different materials. They aren't going to be built out of pine 2x4s and gypsum sheetrock and all of this, right? It will be different. It will be like 3D printed material, plastics, synthetics sort of things. And so I think that there will be this kind of this dichotomy where a really nice house is an older house that was built with the older methods and was hand built, and that it will be considered a luxury to have a new house built by hand. And, craftsmen will probably get paid more because it's less common. You know what I mean? And that means that all of the people that own houses today, that doesn't necessarily mean that the value of their houses is going to plummet or go to zero, because there's still going to be better made houses that people would prefer but can't afford, so they buy the cheap ones that are 3D printed or whatever. Right? I think that's what's going to happen. You would make a good mark, probably not actually. I get why you say that, NASDAQ Keller, but here's my problem. Here's my problem. I am not a good administrator. I am not like a paper pusher, right? If you're at a regulator, it's all about signing documents and reading things and keeping track of paperwork and making sure that the paperwork. I'm terrible at that. I'm so bad at that. You notice, like, I'll be all in on an idea, and then I'll forget about it or whatever the deal is. Like, I have a list right here. What's my list? I want to make my technical analysis shirt. I want to edit a video, or I need to finish editing my video. I'm about halfway through on the video that I want to release next Tuesday. And I want to do my probability book and read Nassim Taleb's book, and I want to do some machine learning. So that's a lot of stuff. I can't do it all. And yesterday I edited the video and read Taleb. Is that TA shirt ever going to happen? I don't know. There's a lot of stuff that I have to do to be able to make that shirt, because I've never used Affinity Designer. That's what I'm going to have to do, right? It's like that's me. I'm like a really good ideas guy, but I would be a really good CEO in terms of, like, I'm the person that has the idea, and then I have an assistant that's really good at following up and keeping track of everything and making sure that it happens, right? But I can't do it all on my own. I'm the ideas person. I need other people to help me execute. That's a big part of why it will really help us out when we make the channel larger. And I really, again, I know I say this, I don't know. You guys don't seem to be too interested in talking about this stream, but I bring it up over and over again because you guys are such an important part of that, right? When you guys comment on the videos, that makes such a big difference, and you guys have been doing great. And I want to talk about it over and over again because I want you guys to understand how significant what you're doing really is. Because to you, like NASDAQ Killer, you made some comments on the videos the other day, which I really appreciate. And I'm sure that to you, it was just like, oh yeah, I finally had the chance to watch that video, and I just felt compelled to comment. To you, it's like it's no big deal, right? But to us, and the potential impact that it can have on me and hopefully to the whole trading space is huge. It's those all those tiny little actions that you guys make add up together are a big deal, right? And if we get to the point where we're able to offload some of that execution of things to other people, is going to make a big benefit, right? Like if you want us to make Sierra charts indicators, because right now I don't know if the demand for the indicators is really enough for me to justify putting the time that it would deserve over making the videos is kind of the problem with that one, right? But if we get to that point, then and we can hire people to help me develop it and so forth, that and we have more reach so that more people will download it, right? Then we'll have a lot of time to be able to put stuff into that. And not only will we make Sierra charts ones, but I think we want to do it for the Edge Clear platform. And I think that we want to make even better tools, right? So keep it up, we'll get there. But that's why I don't think I would make a good market regulator. I'm not the best at crossing all the I's and T's and stuff. Well, didn't I say before, like, well, if we wanted to take the trade is probably to go short here at 75 again, and maybe you could get 74. And I said, I have no reason to think that that is going to happen, so I'm not going to take it. So I am still sticking by my trade. I had absolutely no reason to believe that it was going to go that way. I just kind of knew that that was like the trend and the possibilities and the most likely thing. The thing that I was looking at maybe would happen. I had no reason to think that it actually would happen. And here, the way that it played out, I think really reinforces that, because why did we move this way? It appears to me that we made this move because the dollar is strengthening, and we're seeing the 6J move up as well. And that was certainly not something that was on my radar. I have no clue why that is happening. So if I had taken the short and we had moved down here and I had made money on it, it would have been 100% luck. Well, not 100% luck. I do kind of have this feel for it. I don't know how to explain it, but it seems like I do have a feel for it from time to time. Start a section in Discord for Sierra. I'll chime in and you can gauge the interest. Yeah, well, but that's the thing is, like, how do I put this? Well, I don't know how I can put this. Like, I suppose that well, it's kind of a hard thing. Like, if 2 people a month bought it, then it would be worth uh, putting effort into more than the videos, right? But in the longer term, the videos are what really helps you guys the most, right? We could do some individual ones, but I don't know. And maybe we will have some time. I don't know. I'm hoping I'm going to do some video editing on Friday. And so I'm hoping that actually, my plan is finish writing this other video and I'm going to record it on Monday morning, right? And then it will just be right back to the grind. I don't know. It's hard to find the time for it, dude. Christmas was probably one of the best times to do that, and it didn't happen. But I don't know. But that's the whole thing, is like, my audience is mostly Ninja Trader, and with the Ninja Trader ones, we don't get that many. So even though I'm sure there's a couple of people on Sierra charts, I don't think that there's enough of you that it would really move the needle any more than the Ninja Trader ones will. But hey, I tell you what, the other side of this is, the more people that end up buying the Ninja Trader package, the more likely I am to try and port it to other platforms and put more effort into it, right? So if you have a friend that uses NinjaTrader, make sure you send them to to my website. Start a section in Discord for Sierra. You know what? One of the things that I've had a problem with is um, the activity on Discord is very much a factor of how much effort I'm putting into it, and sometimes I just don't have anything to say. So like people will ask questions in the algorithmic trading one. What is it called? Algo development. You know, sometimes somebody will ask a question and I don't see it for a day. You know, I feel bad about that. I feel like we could do better with Discord. But I don't know. Discord is good. You know, another thing there is there's just, you know, it's just kind of an open thing. So that's okay. In fact, it's kind of fun that there's like a different group of people on Discord than there is on YouTube. You know, gives me variety. Variety. Why is my voice cracking like that? Oh, you know what? I didn't see your message until now. So Salim, he sent me, oh, I didn't have a very good day. And it looks like he, oh, maybe he only made 305 or whatever. Either way, I'd say that that's good. I think one of the things that will happen is you have a really good day. Like you had a really good day earlier in the week, right? And then that like raises your expectations. So then you come in on a day like today and you expect to make tons and tons of money, right? Like, look at this here on the 10-year, right? The most that we could have made in the 10-year is $10. That's it. It seems like it's a really big, strong trend, but in reality, it's kind of like it's really quite meh in terms of the degree of the move. I will say it's a decent amount of volume. There's about 40K contracts long that came in here, and I have absolutely no clue where they're coming from or why. But there is a strong trend. I'm actually really happy with my read. Like if I had taken trades today, I don't know if the risk justifies it, but if I had taken trades today, I would have been happy with them, right? So whatever. Well, let's check through here on Twitter. We're getting close to time to go, so we should come through and just see if there's anything we want to note. Oh, okay. So one thing I am noting here is that when we started to get this rise in the dollar, it has hurt Bitcoin. So Bitcoin is now pressuring 4,300 or so. That could be a bad thing in the long run. I don't know how long-lived this move in the dollar will be, though. So we got that. Let's just kind of come over here into the charts. You can see 10-year did move up. So we got a leg here, post meta order, pullback, then another leg. And this other leg was very much accompanied by a change in the dollar. The dollar was initially weak in this morning, and now we've just had a little bit of a rise. I don't know if that's going to continue, but it's been happening. You can also see here the 6J moving up, generally speaking. So probably our best guide right now, if we're trading treasuries, I'd want to be keeping an eye on the 6J, right? For the upticks and downticks. Oil got hurt with that rise in the dollar here over the last 30 minutes. But hey, you know what? Like oil is still up in the 82 and a half range. So oil's doing awesome for the week. Okay. And I think there's some reasons to think that they could continue the move even into next week. And then we got the the ES here. I'll show you here on the 5-minute chart. You can see we did have a blowout. So this decline has put the long market makers underwater. So it is a significant down move. But in the bigger picture of things, when we come into like the volume profile, because when I see a move that I'm not anticipating, I'm always looking, okay, is there something I miss? Is there a flow that's really important that we should be aware of? And in this case, this is just like a reversion to the mean that still don't have anything going on here that suggests to me a really strong piece of information or flow that we need to be worried about. So probably the case that this is just a move being driven by the dollar that there's no way that we as retail traders would ever be able to predict. So as far as we're concerned, it's just random, right? But that is basically where we're at now. And I didn't end up taking any trades. There was a time where I would just really feel compelled and have a hard time not taking a trade. And these days, I just don't even care. It's like I can tell it's not doing anything. It doesn't matter to me. Then going back and reading through you guys' comments. Some good discussion today, guys. Yeah, lumber. I need to buy more redwood to finish my garden boxes so that I can put down some gravel and not have to weed that area anymore. Okay, the White House is tweeting about Biden purchasing another 500 million COVID-19 at-home tests. Some people on Twitter complaining about MTG. Can you tell, like, my own reluctance to talk about her kind of tells you everything that you need to know about. Well, that's my own inherent political bias, right? Like, she's an embarrassment. I just don't want to even think about it. Oh, man. Let's see here. Brainerd, I supported the removal of reserves from the leverage ratio for some banks, and I believe more adjustments might be made. Forbes tweets, why Nintendo needs to ditch the Switch? What? You know what? Nintendo has been having a hard time. Their stock, so let's talk about this, okay? Nintendo has been having a hard time. I think that their stock has been down, hasn't it? I don't have enough time to go and look it up. But I don't think, now somebody would be tempted to say, well, it's because their console isn't powerful enough and is just not competing very well with the Xbox Series X and PlayStation 5. I don't think that's the case. I think that gamers are kind of unhappy with Nintendo. They basically, gamers these days, they want to play games on stream. They want to play games together with people and stuff. And Nintendo has kind of put the kibosh on all of that community stuff. And so all of the gamers have just been like, okay, fine, I'm just not going to. Like, their latest Metroid game was really good. It was really good. You don't see much about it. Why? Because nobody wants to promote the Nintendo stuff, right? So it would be a case where I think a lot of gamers would have both a Nintendo and a PlayStation 5, but because they're not happy with Nintendo right now, they're just not buying it. Or I think that there would be a lot of gamers that would be inclined to buy like 4 Nintendo Switches and have one for every member of the family and play them together. But again, because of the way that Nintendo's doing it, they're disinclined to do that. Maybe Valve does that with their thing that's supposed to come out. And then, it playing LAN parties where everybody just brings their handheld maybe becomes a thing in the future. That would be fun, right? Okay, guys, it is time for me to go. Thank you guys for your help. Make sure you give that video a like. If you're new, make sure to subscribe and click the bell icon. That makes it a lot easier to find the stream, makes it a lot easier for you to know when new videos come out. This is one of those channels have a very high percentage of bell icon things. I think a lot of people are like, oh, I never click the bell icon. And for this channel, you're going to want to click it. Okay. So, thank you guys for all the likes. It's really great. Okay. I will see you guys tomorrow. And in the meantime, stay profitable, friends.